Welcome to the deep dive. Today, we're really digging into something big, a huge global shift it's already happening. We're talking about a fundamental reordering. Economic power, demographic power. It's all changing, and it's going to define the next few decades. Okay, let's unpack this, our mission today. To give you the essential insights, those real aha moments. And the context, the background, you need to be properly informed about what the world might look like around 2050. We're taking a deep dive into China and India, their economic paths, how they compare, how they contrast. You've got a stack of research here, reports, projections. We've tried to structure it clearly for you.
And what's fascinating here, I think, is that this isn't just about, GDP numbers on a spreadsheet. These figures tell a much bigger story, a human story, really, about populations, military power down the line, and the future shape of societies. Billions of people. It's definitely complex. But understanding these threads, well, it's absolutely key if you want to grasp where the world is heading.
Absolutely. Couldn't agree more. So let's start with China. That incredible economic story we all watched unfold. For decades, it seemed unstoppable, right? That relentless growth. Everyone remembers the double-digit expansion talk, especially back in the early 2010s. But then, maybe surprisingly for some, things started to slow down quite significantly. What actually happened to that rocket fuel?
It's a really dramatic shift, yeah. That last boom, as some call it, was pretty spectacular. 2010, 2011, we saw real GDP growth over 10%, then over 9%. And that was largely driven by, the massive stimulus after the 2008 financial crisis. Beijing just poured trillions into infrastructure, into real estate. It felt like the final burst, maybe, of that hyper-growth phase. But it gave way pretty quickly to something else, something policymakers actually started calling the new normal.
Ah, yes, the new normal.
Exactly. That's the key phrase here. Growth began to steadily slow down. It dropped from nearly 8% in 2012 down to 7% by 2015. And this wasn't just a blip. It was a deliberate policy change, wasn't it? Moving away from just chasing raw numbers.
Towards quality over quantity.
Precisely. Quality of growth. And there were external factors too, of course. The Eurozone crisis hit their exports, the property market started to soften, and you began to see issues like industrial overcapacity popping up, all feeding into this slowdown. Then, maybe 2016 to 2019, things seemed to stabilize a bit. Growth hovered around, 6.7, 6.9%.
That's still pretty high by global standards.
But, and this is crucial, that stability came at a cost, an increasing cost, which was mounting debt. We'll definitely get into that. By 2019, even before COVID hit, growth was down to 6.1%. That was the slowest in decades, pre-pandemic.
Yeah.
And you had the U.S.-China trade tensions adding extra pressure then, too.
Right. And then the pandemic just threw everything sideways.
Completely. A huge shock. Growth dipped sharply in 2020, naturally. But then a big rebound in 2021 as China reopened. Strong, but it didn't last. Now we're in what analysts are calling the new plateau, say 2022 through 2025. Growth slowed right down again in 2022, only 3.1%. That was the zero-COVID policy impact. Plus that deepening property slump is now stabilizing, maybe around 5.5% for 2023-2024 estimates. But analysts are pointing to some really big structural worries.
Like what specifically?
Well, the old export-led model seems to be faltering. Demographics, which we'll talk more about, are becoming a major headwind. The real estate downturn is serious. And underlying it all, that rising debt.
Okay, so putting it all together for you listening, what does this mean? It means the era of China's seemingly endless double-digit growth, that's over, done. We're seeing this consistent, gradual slowdown. This new normal is a much more moderate pace. It's fundamentally changing China's economic identity. And that point you made about debt, that leads us perfectly into the next big piece of this puzzle for China. It's massive debt burden. This is where I think it gets really interesting because the debt was so vital for that past growth. But now it looks like a huge potential liability, doesn't it?
You've absolutely hit on a key point. It's a double-edged sword. Let's trace it back. Early 2010s, right after the global financial crisis, Beijing unleashed that huge stimulus package, 4 trillion yuan, remember. That drove massive borrowing, especially by local governments and the big state-owned companies, the SOEs. By 2010, China's total debt to GDP ratio was already around 170%, which is high.
And it didn't stop there.
Not at all. The mid-2010s saw a really rapid surge. By 2015, that debt ratio climbed to roughly 250% of GDP. A lot of that was household debt increasing, mortgages, and so on. But crucially, you also saw the explosion of these local government financing vehicles, LGFVs.
The LGFVs. These sound a bit murky.
They are. Essentially, they were like shell companies. They allowed local governments to borrow huge amounts off their official balance sheets, so it hid the true scale of the debt for a while. very opaque. Fast forward to 2019, just before the pandemic, total debt was over 270% of GDP. And you also had things like the Belt and Road Initiative adding external debts onto the pile. Then came COVID, the pandemic-era acceleration. Debt just soared again. By 2022, it hit approximately 300% of GDP. And about two-thirds of that was corporate debt. This was when we saw really aggressive borrowing, especially by those giant property developers, Evergrande, Country Garden, Kaisa, names that became globally known for the wrong reasons, leading to all those unfinished apartment blocks you saw images of.
Ghost cities.
Exactly. And now? Well, now we're in what some are calling the reckoning. For 2023 through 2025, the debt-to-GDP ratio is estimated to climb towards 320% by 2025. We're seeing more defaults now. Developers, yes, but also some of those LGFVs are struggling. It's raising serious concerns about long-term stagnation. People are mentioning Japanification risks.
Wow, 320%. That's just a staggering number. It really forces the question, doesn't it? Is this a bubble? Is it just waiting to burst? Or is China somehow different? Can they manage this?
It's the critical question.
Yeah.
And you hear strong arguments on both sides from analysts. They're definitely clear signs of a bubble, no doubt about it. I mean,
Right.
property accounting for maybe 25–30% of GDP, that's unusually high, historically risky. We saw what looked like debt Ponzi dynamics from some developers borrowing new money just to pay off old debts. Those opaque LGFVs are a huge worry. And China's non-financial corporate debt, it's the highest in the world, over 160% of GDP. Huge red flags there.
But it hasn't burst spectacularly yet, so why not? What's different about China, if anything?
That's the other side of the coin. There are reasons why it hasn't burst yet. A big one is the state's control. Beijing controls the major banks, the whole financial system, really. That gives them tools others don't have. They can tell banks to roll over loans, to reschedule debt, basically suppress outright defaults in a way Western economies can't. Capital controls also play a role. They limit how much money can flow out of the country, which reduces the risk of foreign investors pulling out suddenly and triggering a crisis. Less contagion risk. And Beijing seems to be pursuing a strategy of, let's call it gradual deflation, trying to slowly let the air out of the riskiest parts rather than letting it pop. Think of things like the 3 red lines policy for property developers' rules, limiting their debt ratios. It's an attempt to manage it down slowly.
Okay, so they have some levers to pull. But does this debt overhang still impact future growth?
Massively. That's the key insight here. China's debt has flipped roles. It used to be the fuel for growth, right? Pouring borrowed money into building things. But now it's become this heavy anchor. The risks moving forward are really substantial. You've got zombie companies, firms that are basically bankrupt but kept alive by cheap credit. They just drain productivity. You have risks of local governments becoming insolvent, potential hidden crises still lurking in the shadow banking system, and fundamentally paying back or just servicing this enormous debt pile crowds out new productive investment. It really puts a cap on future growth potential. It reinforces that 4–5% band, maybe even lower, as the likely ceiling going forward. And that Japanification risk you mentioned, it's real. A long period of sluggish growth, maybe deflation, high debt. It's a plausible scenario without major painful reforms.
Right, so a slowing economy, this mountain of debt.
Yeah.
But then there's an even deeper, maybe more fundamental challenge building for China. It's population. It's not just economics anymore. It's about the people, the sheer number of people, and the long, long shadow cast by policies like the one-child policy.
Precisely. And this isn't a future problem. It's happening now. The decline has been emerging, really accelerating since around 2010. Look at the fertility rate. Back in the 2010s, it was around 1.6 births per woman. Today, it's plummeted to maybe 1.0, 1.1. That is incredibly low, well below the 2.1 needed just to keep the population stable.
Wow, 1.0 or 1.1.
Yeah. And think what that means for actual births. Annual births have literally been cut in half, from about 18 million back in 2016 down to less than 9 million in 2023, a staggering drop. And the consequence, China's total population peaked in 2022, around 1.42 billion. And now it's actually shrinking in absolute terms. For the first time in 60 years, in 2023 and 2024, deaths outnumbered births. This is historically unprecedented for modern China.
And that means the population's aging rapidly too, right?
Very rapidly. Already over 15% of Chinese citizens, that's around 200 million people, are 65 or older. That number is projected to shoot past 20% by 2030. Soon, China will be, on average, an older country than the United States. Think about that.
What are the immediate impacts? What are we seeing right now because of this?
The impacts are broad. Economically, the most obvious is a shrinking labor pool. That pushes up wages, sure, but it also erodes China's old advantage as the world's low-cost factory. The dependency ratio, the number of non-workers, kids and retirees, supported by each worker, is climbing fast. fewer workers supporting more dependents. That puts pressure on everything. Interestingly, it's also giving a big push towards automation and AI adoption, as companies look to replace increasingly expensive human labor.
And beyond the economy.
Military implications. The People's Liberation Army, the PLA, faces a narrowing recruitment pool. Fewer young men reaching military age. That weakens their ability to replenish forces with sheer numbers. It's a big reason behind their strategic shift towards high-tech warfare. Drones, cyber, AI, relying more on technology, less on masses of soldiers. And socially, you hear about the 4-2-1 family structure. That's one child being financially and emotionally responsible for 2 parents and 4 grandparents. It creates an immense burden for elderly care. Huge pressure on pensions and healthcare systems, too.
Okay, so if we connect these dots, project this forward, what does this demographic picture really mean for China by, say, 2050?
By 2050, many analysts are talking about a potential population collapse. That sounds dramatic, but look at the numbers. Projections suggest China's population could fall to somewhere near 1.2 billion. Some lower scenarios even put it closer to 1.0 billion. That's a drop of hundreds of millions from its peak. The median age, it could soar from around 38 today to nearly 50 by 2050, older than Europe is right now. And that dependency ratio gets really stark, maybe only 2 working-age adults for every 1 retiree. Imagine the strain.
What does that do to the economy long term?
Well, a shrinking workforce inherently reduces potential GDP growth, maybe down to 3% or even less, some models suggest. An older population generally consumes less, potentially leading to a consumption squeeze. You might get what's called an innovation paradox. Even with higher education levels, having fewer young workers could dampen dynamism and risk-taking. And there's a real risk of capital flight if investors see decades of stagnation ahead.
And the military angle by 2050?
It becomes a genuine recruitment crisis. The pool of military-age males might shrink by something like 30% compared to today. That makes the pivot to technology, unmanned systems, space, cyber, AI, absolutely non-negotiable for them. And there's a really important geopolitical angle here, too. Some strategists argue this shrinking demographic window might actually push Beijing to be more assertive in the near term.
How so?
The thinking is they might feel they need to act on issues like Taiwan or solidify control in the South China Sea before their relative power starts to seriously erode due to demographics. A now or never kind of calculation, Brett.
That's a sobering thought. And society?
Socially, you could have nearly 40% of the population, maybe 500 million people, being 60 or older by 2050. The strain on pensions will be immense. Some forecasts say the system could be insolvent by 2035. Healthcare, too. With fewer young people forming households, you could see permanent deflation in the property market. No easy fix for that. And don't forget the social consequences of the one-child policy's legacy, like the gender imbalance, tens of millions of surplus men who may struggle to find partners. That creates its own set of social challenges.
So the bottom line seems to be, China's moved from getting that huge boost from its young population, the demographic dividend?
Right, to now facing a serious demographic drag. And it risks turning into a full-blown collapse that will fundamentally constrain its ambitions to be the dominant global power by the middle of this century.
Wow, okay. That is a truly stark picture for China's path ahead, slowing growth, massive debt, and now this demographic cliff. But as one giant grapples with these enormous challenges, another one seems to be rising, offering this really fascinating contrast. India. It's increasingly being framed as maybe the dark horse in this global power race, almost the mirror image of China in terms of its demographic and economic momentum right now.
That framing is perfect, actually. It sets up the comparison really well. Let's just quickly recap China's position, maybe call it the immediate challenger. Its strengths are obvious, right? World's second biggest economy, around $18 trillion GDP now. The global manufacturing powerhouse, a rapidly modernizing military. The Belt and Road gives it geopolitical reach, huge assets. But as we've just spent time discussing, the weaknesses are becoming impossible to ignore. That demographic decline, the crushing debt burden, over 300% of GDP, growing geopolitical pushback, supply chains moving, the China plus one idea. So the outlook, China remains incredibly formidable, certainly through the 2030s, but fully displacing the U.S. as the number one. Increasingly unlikely its influence might well plateau or even decline relatively after that.
Okay, so that's the established challenger hitting some walls. Now, enter India, the dark horse. What makes it look so different?
Demographics. It's the absolute headline story for India. Its population officially overtook China's in 2023. It's now 1.44 billion and still growing. And crucially, look at the age structure. India's median age is just 28. Compare that to 39 in China, 38 in the U.S. It's incredibly young. India is projected to add something like 250 million people to its workforce by 2050. Think about that. It will be the only major world power with a significantly growing workforce in the coming decades. This demographic dividend window, this period where you have lots of workers relative to dependents, is expected to last until around 2045 for India, a huge potential advantage.
And the economy, how does that look?
Also a story of rapid ascent. India is already the world's fifth largest economy today, about $4.1 trillion GDP in 2024. But the projections are where it gets really eye-opening. Most see it becoming the third largest by 2030, maybe around 7 or 8 trillion, and by 2050. Big names like Goldman Sachs, PwC, they're projecting India's economy could reach somewhere in the range of $25 to $28 trillion.
28 trillion, that's huge. How does that compare to, say, the US or China by then?
Well, in nominal terms, the U.S. might still be slightly larger, depending on the forecast. China, given its slowdown, could be closer to India's size or potentially overtaken. But here's a key point. In purchasing power parity terms, PPP, which adjusts for the cost of living and what money can actually buy India, could potentially be the world's largest economy by 2050, simply because of the scale driven by its massive growing population.
Right. PPP gives a better sense of real economic weight sometimes, and the growth rate needed.
Projections generally see India growing at around 6 to 6.5% per year through 2035. Then maybe settling into a still strong 4 to 5% range until 2050, consistently faster than most other major economies.
So what's driving that growth? What are the engines?
Several key drivers. One is just rapid urbanization. India is about 40% urban today. That's expected to hit 55 or even 60% by 2050. Urbanization usually fuels productivity and consumption growth. Another huge one is the digital economy. India has built this incredible public digital infrastructure called India Stack. It enables things like easy digital identity verification, cashless payments, and their instant payment system, UPI, is phenomenal. It's processing billions of transactions. It's driving a huge fintech boom and bringing millions into the formal economy. Really world-leading stuff in some ways.
Interesting. What else?
Manufacturing is shifting. You hear that phrase China plus one strategy a lot now. Multinationals wanting to diversify their supply chains away from relying solely on China. India is a major beneficiary of that trend, attracting investment. And finally, there's strategic alignment. India is increasingly seen by powers like the US, Japan, Australia, the EU as a crucial democratic counterweight to China in the Indo-Pacific. That brings diplomatic and sometimes economic benefits.
Okay, the potential sounds enormous, but it can't all be smooth sailing. What are the challenges India faces? The hurdles it needs to overcome?
Absolutely. There are significant challenges. Infrastructure gaps are still huge: roads, ports, power. Needs massive investment. Inequality is a major issue. And education and skills are critical. India needs to ensure its huge young population gets the right education and training to actually get the jobs being created. Otherwise, that demographic dividend could be wasted, turning into a demographic burden. Bureaucracy, red tape, policy implementation, these can still be slow and cumbersome, though there have been reforms. And environmental pressures, air pollution, water scarcity, climate change impacts are becoming increasingly acute for India.
So huge potential, but execution is absolutely key. It's not guaranteed.
Exactly. The trajectory is promising, but realizing that potential depends on navigating these challenges effectively through continued reforms and investment.
Okay. This raises a really important question then, for anyone trying to understand the future global landscape. How do these two giants, China facing its constraints, India with its potential, actually stack up against each other by mid-century? What does that rivalry or comparison mean for the world?
Yeah, let's compare them across a few key areas looking towards 2050. Economy first. Economically, as we've said, China seems to have peaked in terms of dynamic growth. It will still have a massive industrial base, but future growth looks limited, maybe in that 3–4% range long term. India, conversely, is on that rising trajectory. If it gets the reforms right, it could sustain growth perhaps in the 5–6% range well into the 2040s. Consistently outpacing China and most other large economies, the economic momentum clearly favors India long term.
What about military power?
Militarily, China likely retains a clear advantage until at least 2040. It's already invested heavily in modernizing its forces, building a blue water navy, developing advanced systems like hypersonics. India also has a large professional military, a nuclear deterrent, and growing capabilities in space and cyber. Its defense budget is rising steadily. By 2050, India's sheer demographic advantage could give it enormous manpower depth, which still matters. But a significant technology gap with China might persist unless India really accelerates its defense tech investments and indigenous production. China probably remains the stronger military power overall through mid-century, but the gap could narrow.
And societally, the feel of the two countries.
Very different pictures by 2050. China, as we discussed, will be aging rapidly, shrinking, facing that real risk of Japanification, potentially becoming a more conservative society, maybe less innovative, focused on managing decline in elder care. Slower consumption. India, on the other hand, will still be relatively young, dynamic, and rapidly urbanizing. It's projected to have a middle class of perhaps close to 1 billion people by 2050. That's a huge engine for domestic demand and will reshape global consumer markets, a much more vibrant, possibly more volatile, but definitely more youthful society.
So putting all these complex pieces together, China's slowdown and constraints, India's rise and potential, the U.S. still a major player. What does the world actually look like by 2050? What kind of international system are we heading towards?
That's the million-dollar question, isn't it? Yeah. Based on these trends, we can sketch out a few plausible scenarios for the global order around mid-century. Scenario 1. Maybe it's still a bipolar world, dominated primarily by the U.S. and China. This is plausible, simply because of their existing scale. They'll still be the two largest economies and military powers for some time. But China's demographic and debt problems might really limit its ability to sustain true parity with the U.S., especially beyond, say, 2035 or 2040. So maybe a less stable asymmetrical bipolarity.
Okay, what's another possibility?
Scenario 2, and this is often described now as the most likely outcome, a multipolar world. This would feature the U.S., China, and India as the three main global pillars. This scenario really depends on India sustaining that 5% plus growth and continuing its reforms. If it does, it becomes too large economically and demographically to ignore. It acts as a third major pole, balancing the other two. This kind of world implies much more fluid alliances. Countries might align with different powers on different issues, less rigid blocs perhaps, more complex diplomacy.
A three-way balance. Interesting. Is there a third scenario?
Yes, a third possibility is maybe a fragmented world. In this picture, instead of clear global superpowers, the world fractures more along regional lines. You might see distinct blocs forming maybe a U.S.-Europe-Japan grouping focused on tech and democracy, a China-led sphere in East Asia, perhaps an India-led South Asia, maybe connecting with parts of Africa or the Middle East. This kind of fragmentation could be driven by things like intense competition over resources due to climate change, fights over energy security, or maybe technology splitting into different competing standards, like the U.S. versus China tech spheres.
Yeah.
Less global cooperation, more regional rivalry.
So bipolar, multipolar, or fragmented. Lots of uncertainty. But are there common threads shaping all these possible futures?
Definitely. Across all scenarios, a few key themes stand out. Demographics is huge. China ages and shrinks. India grows younger for a while, then ages later. The U.S. likely maintains a relatively stable population, probably through immigration. That age divide will be a major global fault line. Economics. India's rise is the big long-term story to watch. China faces that real risk of stagnation. The U.S. likely remains if not the major source of global innovation, but its relative share of global GDP continues to decline. Military. The U.S. probably retains unique global power projection capabilities. China focuses on dominating its near-seas region. India steadily builds its capacity, becoming a major regional power, maybe more. And society. That global divide between aging, slower growth societies and younger, faster growing ones will influence everything from consumer markets to political priorities to innovation potential worldwide.
It seems unavoidable then. The big takeaway is that the era of clear unipolar U.S. dominance that really marked the late 20th and early 21st centuries, that era is definitively ending. And a multipolar balance, probably centered around the U.S., China, and crucially India, looks like the most probable destination by 2050. Though how stable that balance will be is another question entirely. What an incredible deep dive today. Really covered a lot of ground. We've gone from China's, frankly, unprecedented economic slowdown and that mountain of debt to its really profound demographic challenges, and then contrasted all that with India's story, that burgeoning demographic dividend, the potential for a huge economic surge. These aren't just abstract trends. These are the deep structural forces reshaping our world as we speak.
Absolutely. And understanding these long-term forces, these structural shifts, is just so crucial because they're going to define the global rules, the power dynamics, everything really, from trade flows to geopolitics for decades decades to come. It's the context behind the daily headlines.
So, a final thought for you to consider as you watch the news or think about the world. Ask yourself this. Will the really big stories of the next generation, the defining narratives, be written more by the constraints and challenges of an aging, slowing power like China? Or will they be driven by the perhaps boundless potential and energy of a youthful giant like India? Something to mull over. Thank you so much for joining us on this deep dive. We'll see you next time.